Part 2, Money Mind Shift, Unlocking Financial Freedom. Chapter 3, Practical Strategies for Attracting Money. Money can be a fickle thing, but it doesn't have to be. Here, we'll explore practical strategies for attracting money and developing a positive relationship with wealth. These strategies include building a wealth consciousness, developing an abundance mentality, and taking inspired action. Don't worry, we won't ask you to dance under the moonlight naked holding a bag of money. Building a wealth consciousness. Building a wealth consciousness involves developing a positive attitude towards money and abundance. It's like making a salad, but instead of greens, you use positive affirmations and beliefs. It involves recognizing that money is a tool that can be used to create a life of freedom and fulfillment. So, don't treat money like a bad ex, treat it like your personal chauffeur. One way to build a wealth consciousness is to focus on the abundance that already exists in your life. For example, you may be grateful for having a roof over your head, a job that pays the bills, or a supportive network of friends and family. By focusing on abundance, you can shift your mindset towards wealth creation. Developing an abundance mentality. Developing an abundance mentality involves recognizing that there is enough wealth and abundance to go around. Think of wealth like a buffet. There's enough food for everyone. It involves believing that there are always opportunities to create wealth and that abundance is not limited. One way to develop an abundance mentality is to surround yourself with people who have a positive attitude towards money and abundance. You may also want to read books or listen to podcasts about wealth creation to expand your mindset. So, put on your earphones and let the money gurus whisper sweet nothings in your ear. Taking inspired action. Taking inspired action involves taking practical steps towards creating financial abundance. It's like going on a treasure hunt. You need a map and a shovel. It involves identifying opportunities and acting towards achieving your financial goals. For example, you may want to start a side business, invest in the stock market, or negotiate a higher salary at work. Taking inspired action requires a combination of mindset and practical skills. So, put on your thinking cap and grab your toolkit. To conclude, developing a positive relationship with money requires a combination of mindset and practical strategies. By building a wealth consciousness, developing an abundance mentality, and taking inspired action, you can attract wealth and create a life of financial freedom and abundance. Just remember, money can't buy happiness, but it can buy a lot of things that make you happy. Here's an affirmation for practical strategies for attracting money. I am open and receptive to practical strategies for attracting money into my life. I am committed to taking positive action towards my financial goals and creating a life of abundance. I trust my instincts and make wise financial decisions that align with my values and priorities. I am resourceful and creative in finding new ways to generate income and build wealth. I attract abundance and prosperity through my hard work, dedication, and willingness to learn and grow. I am grateful for the opportunities that come my way and for the financial abundance that I am creating in my life. Chapter 4. Building Wealth Through Investing. Investing is a crucial aspect of accumulating long-term wealth and securing financial independence. This chapter delves into the fundamental principles of investing, such as developing an investment strategy and creating passive income streams. The concept of investing is simple. It involves putting your money into assets that have the potential to increase in value over time, such as stocks, bonds, mutual funds, real estate, and more. By understanding financial concepts such as diversification, asset allocation, and risk management, you can make informed decisions about your investments. Developing an investment strategy involves identifying your financial goals, risk tolerance, and investment timeline. Creating passive income streams involves generating income without actively working for it. Understanding the basics of investing. Investing involves putting your money into assets that have the potential to increase in value over time. These assets can include stocks, bonds, mutual funds, real estate, and more. It's important to understand the potential risks and rewards of each investment before making any decisions. It's also essential to have a basic understanding of financial concepts, such as diversification, asset allocation, and risk management. For instance, let's say you invest $10,000 in a stock mutual fund. Over the next year, the value of the mutual fund increases by 10%, and your investment is now worth $11,000. If you sell your investment at this point, you would have earned a 10% return on your investment. However, if the value of the mutual fund decreases by 10%, your investment would be worth $9,000 and you would have lost 10% of your investment. Developing an investment strategy. Developing an investment strategy involves identifying your financial goals, risk tolerance, and investment timeline. For example, if you have a long-term investment horizon, you may choose to invest in stocks or real estate, which have the potential for higher returns over time. If you have a lower risk tolerance, you may choose to invest in bonds or other fixed income assets that have lower potential returns but are more stable. Perhaps, if your financial goal is to save for retirement, you may choose to invest in a diversified portfolio of stocks, bonds, and mutual funds. You may also consider investing in real estate through rental properties or real estate investment trusts. If your financial goal is to save for a down payment on a house in the next 5 years, you may choose to invest in less risky assets, such as high-yield savings accounts or short-term bond funds. Creating passive income streams. Creating passive income streams involves generating income without actively working for it. Passive income streams can come from various sources, such as rental income, dividends from stocks, or interest from bonds. Let's say you purchase a rental property that generates $1,500 in monthly rent. After deducting expenses such as mortgage payments, property taxes, and maintenance costs, you have a net monthly income of $500. This is an example of creating passive income streams through real estate. Another example is investing in dividend-paying stocks. Let's say you invest $10,000 in a stock that pays a 5% dividend yield. This would generate $500 in annual income, or $41.67 per month. This is an example of creating passive income streams through stocks. Real-life cases of building wealth through investing include Warren Buffett, who is considered one of the most successful investors of all time. He built his wealth by investing in high-quality companies with a long-term growth potential. Another example is Robert Kiyosaki, the author of Rich Dad Poor Dad, who built his wealth through investing in rental real estate. In brief, investing can be a powerful tool for building long-term wealth and achieving financial independence. However, it's important to remember that the examples we've provided in this chapter are just that, examples. Before making any investments, it's crucial to thoroughly research your options and consult with a financial advisor if necessary. Investing always comes with some level of risk, and it's essential to understand the potential risks and rewards before making any decisions. By developing an investment strategy that aligns with your financial goals, risk tolerance, and investment timeline, you can increase your chances of success in the world of investing. Creating passive income streams can also be an effective way to build long-term wealth and achieve financial freedom. However, it's important to consider the potential tax implications and other factors before investing in any income-generating assets. In summary, the key to successful investing is education and preparation. By understanding the basics of investing, developing a sound investment strategy, and creating passive income streams, you can put yourself on the path to financial abundance and independence. Remember to always thoroughly research your options and consult with a financial professional before making any investments. Here's an affirmation for building wealth through investing. I am a savvy and successful investor, and I attract wealth and abundance through smart investment decisions. I trust in my ability to identify profitable investment opportunities and make wise decisions that generate long-term financial growth. I approach investing with a positive and proactive mindset, knowing that each investment brings me closer to achieving my financial goals. I am patient and disciplined in my investment strategy, and I focus on building a diversified portfolio that aligns with my risk tolerance and financial objectives. I am grateful for the wealth and abundance that I am creating through my investment efforts. Follow for part 3.